Hello guys, welcome to the Trading Parrot. It took us around 1 month to cross all the way from the bottom of the range into the point of control. And after around 5 days of resistance of the point of control, in a single day, we cross from point of control into the top of the range. So now the question is, what is the price going to do at the top of the range? Are we going to break out from that area, or are we going to get some sort of pullback? In today's video, I'm going to focus on the levels that we need to defend to sustain the move to the upside. Starting from the 4-hour, increasing in timeframes, looking at liquidity pools, order book dissection, potential next targets if we manage to break the top of the range, and the full analysis. We'll cover again a little bit of Ethereum and general markets to check the healthiness of the Nasdaq against those critical levels that we've been talking about in the past few days. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this video? That will be phenomenal to strangle the YouTube algorithm to show this content to more people. Impressive. We are just 5% away from putting an all-time high, and retail is at the lowest level of interest. I've been reading on Twitter some people posting about the hedge funds being short massively in the market, and that actually retail is the one that is betting both on general markets and on crypto for higher prices, and that the hedge funds are really not liking that. So it's kind of a arm wrestling between retail and hedge funds. But at the same time, when I check on Google Trends and I see so little interest in Bitcoin, I wonder, is this because retail is not searching on Google anymore for Bitcoin, but they're still interested? Where is the divergence really? Something doesn't fit. Interesting to look at the news and not seeing anything pointing out today at Bitcoin being so close to an all-time high. At the same time, you can see that the hottest story is about Coinbase users losing 45 million, Trump tricked into XRP, new rules easing security token issuance. I mean, I don't see much taking advantage to tempt retail to get in at this point in time. Usually, what happens at this point when we are about to get a breakout is that all stories are extremely bullish. That is the norm. That is how they get retail to get interested so they can distribute into them. And I got a post here that comes at hand from Econometrics. Bitcoin is approaching a breakout, but it's doing so with volatility declining. That's not the kind of FOMO fuel move we saw in past cycles. This time it's more controlled, more sustainable, it says here. If you look at the chart, you can see that we are in this week in blue, volatility on the decline for 6 weeks. Pretty much that color is within the lowest level of volatility, and the price is moving up. Usually that comes with huge volatility. Maybe the chart is still not catching up, but I guess the message is that I've been also noticing many things that are different, particularly with this specific move up of the price. Nothing bad, just an observation, not a critic. Philip Swift is saying the bears are getting destroyed. Consistent negative funding rates, the red bars in a bull market is such a great bottom signal every single time. We'll look into the order book for live data around the funding rates and see if that's still the case. Sometimes these particular charts, specifically the one from Bitcoin Magazine Prompt, takes a while to update, so you might be seeing negative funding rates from a couple of days ago in the chart, and they appear to you as is fresh data. So let's look at Hypeblock Capital in just a minute. And Ethereum has put an incredible green candle. I think it did a 20% in a day. It's the best daily gain since 2021, according to Dan Crypto. Actually, it's showing 21.43% up Ethereum, whereas Bitcoin put a 5.82. And that has most of the people talking about altcoin season, warming up, and all of that, of course. 235 billion were added to cryptocurrency market today. And according to CoinGlass, this is the largest short liquidations since 2021. We'll look into that as well. Unfortunately, Trading Light is still not fully operational. I wish I could see it because we have a specific threshold that we reach every now and then in terms of liquidations that we've been tracking, but unfortunately they went down. If you search for Trading Light on Twitter, the latest news are the CEO apparently was lost, disappeared, no one had the password to something, and that's why they were struggling, but maybe that's just speculation. 837 million of short liquidations in the past 24 hours. We have bigger than that, but those were longs. Bitcoin breaks 104K as crypto gets a boost from trade deal optimism. Traders bet that China deal is coming. And I remember Trump was saying that next week, early, maybe Monday, they're going to announce something really big and really good for people. I heard as well, I cannot confirm this news, but that he said yesterday that you should buy. I really don't like these comments of Trump saying you should buy, particularly being someone that knows what he's going to say. It really doesn't look good. That's just my personal opinion. If you think I'm wrong, just write it down below in a comment. The perception is tariffs out, risk on, and that the rally is fueled at the moment by sentiment, that those tariffs are going to fade away and that everything is going to go back to normal, the rates are going to be cut and all of that, of course. Let's look at what the Federal Reserve is doing with the balance sheet, because I have a new candle here that I want to share with you. Remember, we have 1, 2, 3 weeks to the downside of the Federal Reserve reducing the balance sheet, and we have a new candle in here where they didn't do absolutely anything. They just stick there. There is no new low, no lower low either. We are still in the area of the breakdown, but we could defend this and maybe define a channel with less of a slope, maybe something more like going in that direction rather than so pronounced to the upside. Anyways, I do care what they do with the balance sheet because that tends to lead where Bitcoin goes as well. And yeah, M2 goes up, China goes up, liquidity into crypto not necessarily yet reflected in the indicator from TED Talks macro. CME gaps, we still have these two ones below the price and the skinny one as well at 99,500. I recommend that you look at the prices below for the CME gaps that are still standing. Those are priced on Binance instead of CME Premium. People say sell in May and go away. We had April 14% up. May is now 10% up. I'm very curious how we're going to end up May, particularly because so far, in terms of CPR pivots, the performance in this model of the price resembles what we did in November 2023, where we also left a month completely virgin. That is because we didn't touch the pivots, and after that we have 1, 2, 3, 4 months to the upside from 33 into 74. That is more than 100% from a virgin month. Most of the months are not virgin, as you can see everywhere we touch the white lines, and so far we haven't touched 91K. Of course, we are just at 9 of May. There's still 2/3 of the month to define whether we're gonna go to the next resistance at 109.5 or if we are going to actually achieve hitting the third resistance of 123. The last time we did that was around November 2024. We hit 1, 2, and 3. There was no virgin month from the breakout in 2024, only in 2023. Just so you know, there has been a significant sell-off of Ethereum in profit in here. The SOPR oscillator is showing that we are hitting the lower band. That is not as significant as hitting the top band. These are two different percentiles of the oscillator of SOPR. When you are at the top, people are selling at profit. When you are at the bottom end, they're selling at a loss, and that tends to find bottoms versus tops. So watch out with what happens in here with the profit takers that are using the 2.5 level to take some more profits that they were doing prior to that. And of course, after a 20% upside on Ethereum with so many people underwater, I completely understand what they want, why they want to unload some of it. Okay, in terms of liquidations and order book, you can see that the short-term liquidity pools that we can see on Trading Different, there's very little left up until 105 is what the short term is being able to track. And once we pinch that, we don't have any more liquidity pools visible in this chart. Indeed, removing 10x doesn't show any more liquidity pools left. So all the high leverage shorts have been taken out. 10x is still there, kind of pending from a thread before getting liquidated as well. But 25, 50, and 100x are all wiped out. So if we want to see liquidation pools for longer term, yes, we're gonna find, and we can find the 3x, 5x, 10x, and some of the 25x. Let's see if those are still standing somewhere. Yes, there are some 25x, but they are located at 109. So price tends to go to high leverage. Notice that 25x is located at 109, and we also have a big accumulation of degens around the CME gap at 91k. To go to 91k, price now needs to move 12% down, and to go to 109 and put an all-time high, just half of that, 5.7% up. Let's bring in all the other pools, and you can see that we have, thanks to the 3x, quite a bunch of liquidations still pending here, and we have a good recipe for a short squeeze as well. We have already consumed all of that, and we are right in front of 105 that represents a hill of yellow, then another yellow, and then we have a vacuum in blue at 110. And if we can pierce beyond that, we get into the largest pool of all the range of historic prices of Bitcoin, which is 115. I will say that after 115, the second largest is 67, and the third largest is 125, if I can still trust my eyes to see these numbers. That doesn't mean that we are going to consume them in that order. That is just for reference. There's nothing guaranteeing that we are going to consume any of these pools, but they do act attracting the price. Funny part is that these liquidity pools are not available on the exchange. They use just an heuristic, an algorithm reading the order books to speculate where they could be located and if they are still there, because people close positions. So many people think that they are just absolutely bollocks. Personally, I've been using them, and they do work for me to give me some bias to contribute to the narrative of the day, and it's rare that we end up missing some of these pools and not taking them. So even if it's opium, it works for me somehow. And on CoinGlass, if we refresh the 1 month, you can see that all the pools from the past month are gone. We still have the ones at 92.4, and I completely understand why people think that this really doesn't work. I see a lot of people just putting one time frame in here, making all the decisions based on that, and missing the big picture. Not having access to the full liquidation pools of the past history is a big downside, and that's how I can see it's not working for many people. At the moment, the price is at 102.7 after almost reaching 105. Longs have increased from 33 to 38. Interesting that they are adding more as the price goes up. It's typically the opposite. And we've seen a pretty decent bar in here of ratio bid versus ask. It increased to minus 0.13. The last time we were at those values was in here, price carry on going up, then after here it carry on, and then it started going sideways. This red bar means that there were tons of limit orders to sell around that price. The orders apparently have gone away, or maybe because it's a ratio, there's been new buying orders balancing things out back into zero. But clearly, in my opinion, some of them got executed with the bar up, and then that pushed the price down. Every time we see a spike in this ratio, I keep an eye, because that can stop the move. Well, and so far it stopped it at 104.3, pushing the price to 102.5, so some effect it had. And the delta finally is over $1 million. It's $1.19 million. Pretty high. I haven't seen this in a long time, since the rally in October in 2024. Many people will say we need to respect the pump now, observe with a critical eye. So far we haven't put the all-time high, but banana zone, as you want me to pronounce it, could be just around the corner. In the 1 month, we see the order book, and there are limit orders now just for 54 million at 105. They were like 70 something yesterday, so they are declining. Then we have 38 million, and at 110, 48 million. We can also see that purple wells don't seem to have stopped in a significant way. There is just a move down, small there, but still within this potential uptrend of allocation from large wells. I will say all the sizes are currently entering in long positions or holding one. Looking at Market Monkey Terminal, you can see in here that the largest order at 105 peaked at around 700 and currently is around 600. There was also an order at 106. This particular candle of 1 hour was the one that probably contributed to the elevated ask in the bid versus ask ratio that pushed the ratio to 0.13 just because of these numbers aggregated of limit orders above the price. That's what we are tracking in that indicator. Now some orders enter here to hold the price, balancing out the orders against this, and that is giving a ratio that is pretty flat. You have buying and selling pressure on both ends, canceling out the indicator. And I was gonna look into funding rates and I forgot. I can see that the last time that funding rates were in the negative, the price of Bitcoin was 93.5. After that, there has been a significant increase in the funding rates. So I'm not being able with this indicator to track negative funding rates, but I'm using an aggregated view of multiple exchanges. Bitcoin Magazine Pro also uses an average, so I'm not sure how they are averaging down or high block capital. Certainly, we've been in an area of negative funding rates. Some exchanges have shown that. If we look at CoinGlass, we can see some exchanges in the negative, some of them in the positive. So it's a mixed bag. I wouldn't say necessarily that right now we are in a huge negative funding rates. It's good to discard that. Fair value gaps to the upside, they are all gone. And I think that is a big news for the day because it took 30 days to consume all of them. We started from this point building fair value gaps. By the time we were at 74, we had plenty of them to go up. So the question is, are we gonna just stop there? Well, all we can say is that if now price doesn't enter price exploration and banana zone on the daily, where we could be producing a signal that is also quite strong, which is you exit from the top of the range and then you re-enter. Call it a signal like this or like that calls for a move to the bottom of the range. Last time we lost the top of the range, we called for a move to 84 and we did it. This time in here, the move was just to half of the range, which is also a possibility. So the task at hand for today ideally is breakout and then follow with a retest above 102, 103. I think to be more precise is 103, 200. Alternatively, build a bull flag in here. A bull flag is a sign of bullishness where the retracement is not as low as the bears want, making them feel uncomfortable, and then the bulls regain confidence, they enter aggressively, and then they hit that resistance again. Repeatedly doing that is a powerful signal for continuation as well. In terms of RSI, we have now this support at 70. RSI, we could say 68, between 68 and 70. We have the resistance of 82, and we have the support at 45 if we lose the 70. So if we want to form a bull flag, it will be ideal that that full bull flag is all with body candles above 100k, 101k. That is where we meet with this support in here at 68, 69, and is the most bullish support. It's not the end of the world. Actually, crossing the point of control at 96.9 could be a big deal because that confirms that we got rejected from the top of the range and that we are losing the top half, which is the bullish side. At that point, we are looking for support at 45, which is currently located at 90.3. When we go at the 4 hour, I also want to give you an update. At the moment, the 4 hour is playing with this support trend line, which is not the end of the day, really. It's just the 4 hour. We are in a strong uptrend, and even on the weekly and monthly doing big things. But it's worth considering here that we could be producing a 4 hour pinch of support. That is something that many people are gonna take advantage potentially to enter from there. Particularly myself, I'm looking for a better opportunity after seeing a rally from 74 into the top of the range. I'm not a price chaser. I went for holidays, and when I came back, all of this was already happening. So when I saw opportunities to short 97.5 into the bottom of here on the range. I was expecting a deeper correction. I'm not calling for a huge one, but just a CME gap or something with a better risk to reward. I didn't get the chance, and price rallied 11% right from there after we saw a ratio of 0.9 where the bids were very aggressive. We call out for that, but I really didn't get that tempted to take the risk. I see a lot of people that are sad for missing out opportunities, but opportunities are everywhere literally, and you're always welcome to take any that you want that you spot in the channel. Don't get upset if I don't take the ones that you like. I'm gonna take the ones that I like. I'm very conservative, and I have a methodology that has allowed me to take very, very little losses and only wins in a long time. Maybe I'm gonna be a little bit more vocal saying this is a great opportunity, not one that I'm going to take. So if you're more aggressive than me, you can still take advantage. Let me know in the comments if that works for you, but I'm not gonna change the way I trade based on comments from YouTube. That will be really silly. Something else I wanna note, remember if you've been watching my videos, these tops 1, 2, 3 that we've been calling out that are very similar to the breakout in 2024. If we zoom in between 3 and 4, which is more or less where we are, we can see that we reach around 80 in the RSI, and then we had a breakdown on the 4-hour. You can see that the breakdown is right there. That put hidden bullish divergence, and that gave the continuation into 90. After that, price continues up, producing hidden divergences all over the place. And look at this anomaly, it's crazy. The RSI goes from 90 to 30, and all of that with price still going up. It is absolutely worth it understanding in full depth how RSI really works. If you ask anyone without looking at this chart and saying, what happens to price if RSI goes from 90 to 30 during a pump? And I'm pretty sure that 99% of the people that have never watched this channel will say that will be a really painful crash in the market. Not always is the right answer. So going back in here, we are right after number 3. If we can count this as past performance really counts, which is not always the case. If we had this breakdown in here on the 4-hour and we produce a hidden divergence, I think it's worth looking at that. Particularly if we go something like around 65, where previously we have obviously resistance, getting into that 65 RSI around the price of 101.5, closing the fair value gap here at 102, might be worth paying attention to the order book bid versus ratio, and if we see strong demand there, we could be due for the last wave into RSIs of 90. Remember, that doesn't necessarily mean the peak of the price. In this pump in here, the highest the RSI reached coincide with a price of 90k, but price stopped 20k after at the cost of bearish divergences. Anyways, lots of details. Weekly has reached the top of the range as well. Nasdaq is right there against their lost support, just 2 points away, about to hit 52. We are at 51. And definitely I'm keeping an eye on how we react to the 21 weekly, which currently we are just kissing it at 20,300. In 2022, we did the same thing in here. We can also see that that coincides with the golden pocket. I'm keeping an eye because we might be breaking out beyond the golden pocket and at the same time being held by the 21 weekly. Nasdaq continuation in here is a strong flag in the upcoming days and possibly throughout the weekend to get all-time highs and go way beyond. A rejection from here is also something that could put a lot of stress in the current move up of the price of Bitcoin. Definitely not something I'm gonna give my back in the upcoming days. Market close today on Friday is really important for this. S&P is a very similar situation. Dollar is about to confirm a breakout on the RSI weekly. So if we close the week like this, we get a breakout bullish of the dollar confirmed. You can see 3 green candles and trying to reclaim the lost support, but the RSI potentially can do the breakout first, which is the order I do like. Gold is putting 2 weeks to the upside and not being able to put a candle close weekly higher than the previous ones, which is reinforcing the idea that we might be getting a breakdown strong long from gold. I am not a financial advisor and not an expert in indices, but I am really liking the setup so far. Do your own research, of course, and don't blame just a dude on internet. Pre-market prices of the stocks, particularly tech stocks. Google, we have here 1 point up, Apple up, Nvidia is also up. So there seems to be a positive sentiment at the moment with stocks. Tesla is 4 points up, Palantir just flat, Microsoft 1 point up, Meta is up 4 points. MicroStrategy is now challenging this order block in here. Pre-market is up around 7 points and about to hit the highest close on a weekly basis. And let me reinforce it once more. Nasdaq breaking this pattern of 2022, call it a clean breakout and taking the all-time highs of 22,000 in here. It is a huge deal because in 2022 we couldn't do that and Bitcoin is front-running that move. If you compare 2022, 21 weekly sent us into a bear market. So we are already 2 weeks above it and about to put an all-time high with Bitcoin, absolutely front-running the Nasdaq. So Nasdaq rejection, Bitcoin bloodbath, Nasdaq following up with Bitcoin, and Bitcoin is gonna just go mental to the upside. We could liquidate up until 125k. I am definitely gonna consider at those points to unload some more spot from my Bitcoin holdings. Hopefully that drives Ethereum as well, hopefully into a new all-time high, so I can also start celebrating to sell my bags together with Bitcoin. Guys, if you want to trade $500 for free, I'm currently running a position airdrop on Bybit. There's a link in the description. You click that link and then you click register to claim and you get to choose any of these coins in the list to trade with the $500 and you get as well to keep the profits, of course. But if you want to go non-KYC, you're in a rush, you just want to open the account, deposit and start trading in seconds without having to go through all the hassle of the KYC, sure, we have Bluefin Exchange link in the description that offers at the moment deposit and trade bonuses. The campaign is running up until the 15th of May. Thanks so much for watching and I'll see you on the next one. Enjoy the weekend as well.